Hello again and good afternoon. Hi, I'm Jenny Medlin. I am an education and outreach specialist here with your Missouri Loggers, and it's a privilege to be meeting with you this afternoon to go over our webinar topic today of application process and payment options. As you're approaching retirement, one of the biggest questions you'll have to make is when you wish to retire. But once you know when, then it's a matter of what you need to do to apply to receive benefits through loggers. And when you're receiving benefits from loggers, you have two big decisions to make for your future income. So today's webinar lasts about 30 minutes to 45 minutes, depending on questions. Throughout the presentation, if you have questions, please type those into the Q&A feature or into that chat feature. I'll do my best to answer those as we go, but certainly at the end, I'll open it up to a Q&A session to be sure all of your questions are answered today. Also, if you have any reason to need to leave, please don't feel bad if you need to excuse yourself or tend to other matters. This presentation has a pre-recorded version on our website, so you can access it and listen to it again at any time that's convenient for you. But without further ado, let's go ahead and begin. With retirement through loggers, it can occur the first of any month after you have achieved a vested status of at least 5 years and are eligible. Then it's a matter of determining when you're going to be ready to terminate full-time or covered employment with your loggers covered employer. When you know you're ready to do that, you can look for the first of a month to file to start and receive your benefits. Just as a review and back to the basics, let's talk a little bit about your loggers benefit and how it's calculated so you can anticipate what you can expect to earn from loggers. Remember, loggers is a defined benefit plan, meaning we have a defined formula used to calculate your benefit through loggers. Also meaning being a public pension or that defined benefit plan, your benefits through loggers are guaranteed payable monthly for the rest of your life. So our longest standing retiree has 54 years under her belt in retirement alone, over twice as long as she's ever physically worked for our system. And she still receives that check the first business day of every month. For you to have an idea of what you can expect your benefit to be, remember, our formula is comprised of 3 factors. There on the screen, you see the first is the benefit multiplier. Keep in mind that multiplier is different per each employer. Every employer gets to elect a multiplier ranging anywhere from 1% to 2%, or it could be as high as 2.5% if you are non-Social Security contributory. Then the next 2 factors are ones that us as individuals have greater control over, and that's going to be how much you're earning, especially within the final 10 years of your employment. That's the time frame we're looking for your final average salary range. That final average salary range, it too is an employer election. They can elect between a 3 or a 5 year, but with it, they're going to look back, rather we at loggers are looking at the last 10 years of your covered employment for the 3 or 5 years of greatest and consecutive wages to add together and determine your final average salary. For most of us, it's going to be our last 3 or 5 years, but for some, if you're working a position of higher pay and should move to a position of lesser pay, so long as those higher wages still exist within that 10-year time frame, you'll still be golden. We'll use those for your greater consecutive wages. And then the third factor, one that we have the most control over, is how long we choose to work and stay with our positions in a covered loggers employer. So there at the bottom, you'll see there's a formula that looks very similar to what yours will look like when we calculate your benefit. In this example, the employer has the L7 benefit program using that 1.5% multiplier times a final average salary of $3,000. So this individual was earning roughly $35,000 to $40,000 towards the end of their career. and worked for 25 years at this loggers employer. When we multiplied her formula out, that totaled $1,125. That $1,125 is what represents the gross monthly benefit amount known as the life value that can be paid to her monthly for the rest of her life. So again, that's just a quick overview of how your benefits are calculated. Keep in mind, as you're continuing to work and thinking about retirement, understand the factors that do impact your future benefit for life. And that's going to be your service. Every month you're working, you're earning service, so long as you're still working those full-time hours required by your employer. And then naturally, as you earn more as you go, when you do find yourself in positions of greater pay, it can be beneficial to work it for the 3 or 5 consecutive years, but it's not required of you to have to do so. Where it can start to hurt your future benefit is if you should go from a position of higher pay to lesser pay, and then stay in that position of lesser pay. In the case of a 5-year final average salary range, if you stay in that lesser paid position for over 5 years, because then you're starting to lose those higher wages out of that 10-year time frame. For a 3-year final average salary range, if you should stay in that position of lesser pay for more than 7 years, again, you're starting to lose those higher wages out of that time frame. So please be mindful. And here's a great illustration of how time, but also earning higher wages can help boost that future benefit. Take a look there in the first scenario. At the age of 55, she chooses to retire with 25 years of service. Well, our member in this example is a general employee. So many of you are aware with eligibility, age 55, you can retire, but it's considered early retirement age reduced benefits. So we calculate her benefit out, and remember it's $1,125, but to retire at 55, it's a 30% reduction, 6% per year or 0.5% for every month younger you are. So we reduce it by 30%. She would still expect to receive $787 monthly for the rest of her life from loggers. Take a look though, in her decision to continue to work at least through age 60, now she's gaining, in addition to normal retirement eligibility where she achieves the full 1.5% multiplier, she's also earning 5 additional years of service. So with 30 years of service times her final average salary, which in her case, she did take a position of lesser pay. We see that her benefit though calculates to $1,350. So by choosing to commit to another 5 years, it helps boost her benefit monthly for the rest of her life. Then there's the scenario of not only does she choose to work an additional 5 years to normal retirement eligibility at age 60, but in her position, she's going to earn additional increases to her pay. It's calculated to be about a 2% increase. So now she's achieved full retirement, meaning she achieves the 1.5% multiplier through her employer. Her final average salary, because she earned those increases, it too grew to $3,300. And with 30 years of service, when we multiply that formula out, now her benefit for her life is $1,485 in retirement. So again, the power of staying and earning additional service, as well as earning higher wages as you're preparing for retirement, can be instrumental to your future funding for your retirement. And that final average salary, it's something that is key to keep in mind, especially as you're approaching retirement. Remember, when you announce to retire, we're going to look back 10 years from your retirement date, so 120 months, and it's within that 10-year time frame that we are looking for your employer's elected final average salary range. So taking a look here on the screen, we see that she retired March 1st of 2020. We look back through March 1st of 2011. In doing so, if her employer had elected a 3-year final average salary range, there in blue, we see that her 3 years or 36 months worth of greatest and consecutive wages occurred between 2016 to 2018. Now, for many of us, like I said, typically it's going to be our last 3 or 5 years. But like in her scenario, some of us might work that position of higher pay, be it because we're a supervisor or we're at an employer with greater salaries. And then we take a step down to alleviate some of the stress, or we have to move and go to an employer of lesser pay. Much like in her case in 2018, where we see she took a position of lesser pay. That does not impact her benefit calculation when it comes to the final average salary. We are still going to revert back to those 3 years of greater and consecutive wages she earned at her previous employer. But as I mentioned earlier, if she had continued in her position of lesser pay for 7 or more years, remember that time frame, that 10-year timeline, it moves as well. So that's when she would start to see an impact in losing wages from 2016 when she was earning greater salary. And so please be mindful of that as you're gearing up for retirement or considering career changes and moves. Be aware of how it will impact your future benefit. All right, now that we've covered the basics again and just a quick review of how your benefits are calculated, let's dive in now into that application process. Your application through LAGERS can be filed online through your personal MyLAGERS account. And to access MyLAGERS, you can simply go to our website, www.molagers.org, and click here on the MyLAGERS registration. If you've already registered, enter your user ID and password, and you might have to answer security questions to gain access to your account. But if you've not, simply click Enroll Now and go through that process to set up an account. It's very valuable, and you can immediately file online for your retirement. If you prefer, however, you can even file by completing a paper application. Back on our home page, if you go to Members, Forms, you'll see we have the retirement application conveniently here where you can type in your information. You will, however, need to print it off because your wet signature is needed, or rather your authentic signature is needed. We will not accept a digital signature. Once you've completed that form, you're welcome to fax it, scan an email, mail it, or if you're in the Jefferson City area, you may always drop it off at our office here. After we receive your application, that is when we receive that you've expressed intent to start receiving benefits. You have to file the application at least 30 days in advance, so 1 month prior to your retirement date. We will accept it as far as 90 days in advance, so 3 months prior to your retirement date. That's where once you've identified when you're going to retire, it's helpful to set a calendar reminder. For example, if I plan to retire October 1st of 2022, I have to make sure to file that simple one-page application by August 31st in order for it to be valid. Once LAGERS receives your application, that's when we notify your employer and request verification of your earnings and of your service. When your employer provides that back to our office, then our team computes and calculates a benefit estimate, payment options election form, and then also prepares what's known as your retirement packet. This retirement packet is mailed to you 1 month, about 1 month or 2 to 3 weeks prior to your retirement date. Therefore, the sooner you can file for retirement, so if you can do it within 3 months of your retirement date, the better, It is because we have greater time for processing and oftentimes can get this retirement packet to you a month before versus if I'm that person that filed on August 31st. Now, Loggers is having to reach out to my employer, get information, prepare my retirement packet, and get that retirement packet to me within 2 weeks. That retirement packet, as mentioned, is going to include your election of payments form. This is the most important form for you to complete. With your 2 elections, the 2 major decisions you have regarding your retirement benefits, one of which will be what monthly payment option do you wish to be paid under? And the second one is, do you want to take a plus payment known as a partial lump sum payment from Loggers? If that is something you're unaware of, good thing is we're going to be going over that in this webinar shortly. In addition to that elections form, there will be a tax withholding authorization and additional tax information for your records. A direct deposit form. Please know that that direct deposit form, that is to be completed by you, but also an official at the bank where you would like for your monthly benefits to be deposited into your checking or savings account. So you will have to make some time to coordinate to go to the bank or to have that sent over to the bank to have it properly completed. And also included in the packet is a beneficiary designation form. This packet of information, once you receive it, which again, typically 2 to 3 weeks or a month before your retirement date, we ask that you complete it and return it by the 12th of the month before you retire. So here I have filed as of August 31st. I get my packet in the mail, let's say September 7th. They're able to turn it around to me. I have to complete these forms and return it back to Loggers by September 12th is our recommendation. And that's to allow for proper processing because with an October 1st retirement date, I will expect my first benefit payment as of October 1st. Should there be a delay and perhaps I didn't return my packet until September 25th, I will still be honored for an October 1st retirement date, but because of processing, I won't receive my first benefit on October 1st. It will cause a delay to my first payment. Okay, so please be mindful of that as you're preparing and completing those forms. Something else to note and why the payment elections form is the most important. That form, it includes your 2 choices that once you make those and are paid your first benefit, you can't go back and change it in retirement. So it's great to be thinking about it now before you have to make the decision and feel confident about which decision you're electing through Loggers. Again, if you have questions at any time, please don't hesitate to type those in to that Q&A or chat feature, but seeing none at this time, we'll continue on. Once Loggers has received your retirement packet, return to us. Again, that's when we're processing and setting up your payment account. With an October 1st retirement date, you would expect your first benefit through Loggers on October 1st, or technically this year, I believe it falls on a Saturday. So retirees for October 1st will receive their first benefit on Monday, October 3rd. Benefits through Loggers are paid the first business day of every month, like clockwork. So it's very important when you are a retiree, be sure that if you update your bank information, you notify Loggers either by completing it through your My Loggers or giving us a call to update your direct deposit information. Now that you have a better idea of the paperwork you're going to need to complete, let's dive into those important payment options that you will have to select from. You have 4 payment options for the monthly benefit. Again, you get to choose one for the rest of your life, and the one you choose is the one you're locked into. And then the second decision you have to make is whether or not to take a plus payment. With your monthly payment option, The first one is known as the life option. The life allowance is that pure formula, the benefit multiplier times your final average salary times your years of service. That results in your greatest monthly benefit. That's guaranteed payable to you monthly for the rest of your life if you elect the life option. The way the life option operates, we pay you your greatest benefit, but upon your passing, typically nothing further is payable to any other person or entity. Okay, so again, we pay you your greatest benefit, but generally upon a retiree's death under the life option, generally no further benefits are payable. The exception to this, and why we still ask that you name a beneficiary, is, for instance, if you've been required to make contributions to loggers, or if you've ever purchased service, you have an account balance in our system, and everything you've ever paid in, it's guaranteed to be returned. So in paying you a life allowance, if you did not live long enough to deplete that account balance, that means there's still a remaining balance that would be payable to your designated beneficiary. Now, if you're sitting here and say, well, Jenny, I've never had to complete or make contributions to loggers, and I've never purchased service, so I don't have an account balance. Good news is you're still guaranteed benefits for the rest of your life. It's been funded fully by your employer. Under the life allowance, you're right. There's likely nothing further payable. However, it's always good to have a beneficiary designated for final affairs, whether it's because we need to know where to direct the final 1099-R, which is the tax document you'll receive in retirement, or also in the event a retiree does change their bank but fails to update it with us, we still have benefits that are payable. And if we can't pay it to the retiree, we'll refer to the beneficiary to know who to pay those remaining benefits to. So life allowance pays you the greatest benefit for the rest of your life, but typically upon passing, nothing further payable. This is when some retirees will say, or some members preparing for retirement will say, easy, it's just me. I've worked hard. I want to take my benefit. It's the greatest thing. And I want to maximize it and take it for myself. But others will say, you know, that sounds great, but if I were to pass, I have a spouse, or I have children, or I have a house to still pay, and I wouldn't want to leave that burden on somebody. What are my other options? And that's where you might be interested to learn that we have an option C. Option C is available to each individual, and it is known as a term certain plan. With option C, you, the retiree, we calculate your benefit, but then you take a 5% reduction. That's a lifetime 5% reduction. So in looking at the example, remember her calculated benefit for life was $1,125, and electing option C, we reduce it by 5%. So now her monthly benefit is $1,068.75. That's still payable to her monthly for the rest of her life. By taking that reduction, she's guaranteeing that for the first 10 years of her retirement, so the first 120 months, remember if she was to retire March 1st of 2021, that means this term, or here March 1st of 2019, that means this term is valid through March 1st of 2029. For the first 10 years of her retirement, if her death is to occur, then we guarantee that that same monthly benefit, the $1,068.75, then continues to a beneficiary of her choosing monthly, but only for the remainder of the term. Once the term expires, in her case, March 1st of 2029, all benefits to a beneficiary cease to exist. Meaning, if the member has passed away, then we continue those benefits to the beneficiary for the remainder of the term. But when March 2029 comes around, then all benefits to the beneficiary stops. Nothing further would be payable. However, if our member outlives the term, so say she lives 25 years into retirement, that's great. She is still guaranteed this lifetime benefit of the $1,068.75 monthly for as long as she shall live. Then upon her passing, because it would be outside of the term, nothing further would be payable to a beneficiary. Members typically will ask at this time, why does anybody consider an option C plan? Well, for an example, a member and his wife were both preparing to retire. His wife still had 5 years before she would be eligible for retirement in Medicare, in which case he didn't want to take a life option because if he prematurely died, say 2 years into retirement, he knew under his life option, nothing further was going to be payable to her. They had explored taking a joint and survivor plan, but it caused a greater reduction to his benefit, and they wanted to maximize funds at this time. So he looked at the option C and looked at, hey, I take this lifetime reduction, but guarantee that if my death occurs within the first 10 years, at least my spouse would have some form of support to make sure she gets to her retirement, Medicare eligibility. She'll be drawing her own income and wasn't relying upon his retirement, but it also offered some cushion to help pay off the mortgage. It's going to be a personal decision for each and every one of us. Retirement is unique and individual to us all, so it's a matter of choosing what's best for you. When it comes to option C, you get to name beneficiaries, and these beneficiaries, much like the life beneficiaries, can be any person, it could be multiple people, and it could be an entity like a trust or an organization near and dear to your heart. You can even update these beneficiaries at any time during retirement. So for example, if I retire with option C and I want to name my significant other, but then 2 years into retirement, I decide, you know what, he's going to be just fine. I'm going to name my nephew to receive benefits if my death is to occur early. Okay. Very good. Again, if you have questions regarding any of the payment options, please don't hesitate to type those in. So those are the life and the option C. Those are 2 of the 4 plans. Life and option C are available to all members preparing to retire. Let's talk about now options options A and B. A and B are known as joint and survivor plans. The way joint and survivor operates is that you, the retiree, choose to name one individual known as a lifetime beneficiary, or also referred to as a joint annuitant. In doing so, you, the retiree, will take a reduction to guarantee that if you should predecease or die before your lifetime beneficiary, then a portion of your benefit continues to him or her monthly for the rest of his or her lifetime. Okay. Taking a look, option A is what's known as a joint and survivor 75%. Because 75% of the benefit that you as a retiree would receive would then be payable to your spouse or your loved one monthly for the rest of his or her lifetime, should you predecease or die before your lifetime beneficiary. So in taking a look at the example here, remember her life allowance is $1,125. She is married and her spouse is the same age as her. In taking a look at option A, she sees that her benefit would be reduced by 15%. So now her monthly benefit would be $956.25. We, through LAGERS, would pay her $956.25 monthly for the rest of her life, guaranteeing that if she predeceased or died before her husband, who is her lifetime beneficiary, now 75% of her benefit totaling $717.19, continues to him monthly for the rest of his life. Then upon his passing, nothing further would be payable. Through joint and survivor and through LAGERS, there is what's known as a pop-up provision. In the event the lifetime beneficiary, so in her example, if her husband should predecease our member, our retiree, notify our office, and then the retiree's benefit pops up to the life value. So therefore, she would no longer have a reduced benefit. Her benefit would increase back to the life value of $1,125 monthly for the rest of her life. Then upon her passing, nothing further would be payable since her lifetime beneficiary had predeceased her. Option B is very similar in nature. It too is a joint and survivor plan, but it's known as joint and survivor 50%. With option B, our retiree takes less of a reduction. When you're the same age as your lifetime beneficiary, it's a 10% reduction. So we see in her case, she's now earning $1,012.50 as a retirement benefit, guaranteeing that if she predeceased and dies before her husband, her lifetime beneficiary, then 50% of her benefit, totaling $506.25, would continue to him monthly for the rest of his life. Remember, upon his passing, then nothing further would be payable. Also remember, by taking that reduction, if the lifetime beneficiary should predecease you, please notify our office, because at that time, we will enact the pop-up provision, which pops your benefit up to the life value. So then we continue in her example, $1,125 monthly to her for the rest of her life. Options A and B are not automatically available to every member. It will be dependent on whether or not you have a significant other, a spouse, or other individual who qualifies for a lifetime beneficiary, designation. To determine if an individual qualifies to be your lifetime beneficiary, ask yourself, have you been married to him or her for at least 2 years immediately preceding your retirement? So if you're retiring October 1st of 2022, have you been married to your spouse since at least October 1st of 2020? If yes, then it's an automatic guarantee that your spouse qualifies. If you say, no, we haven't been married that long, or no, I'm not married at all, but I have someone else in my life who is dependent upon me, then ask yourself, is that person an adult over the age of 40 who has been at least 50% dependent upon you, so shares 50% support or more for at least 2 years leading up to your retirement? If yes, you can still qualify that individual as a lifetime beneficiary. In that case, we are going to ask for you to sign an affidavit guaranteeing, or rather you certifying, that they are somebody of insurable interest. It's important for you to know that in electing a joint and survivor plan, the person you name as a lifetime beneficiary, they are set in stone. So it is locked in, which is why there are strict criteria on who qualifies to offer you protection as well. Remember, in the event of death of a lifetime beneficiary, notify our office, because you as a retiree, you're no longer expected to take a reduction because we're no longer to pay anyone else out. Therefore, we want to pay you, our retiree, your greatest benefit. So we pop your benefit up, but it will only be popped up once we are notified. If divorce occurs, or if you should separate from your lifetime beneficiary, there is no pop-up provision. Your then ex-spouse or ex-significant other still remains on your account. So if you should predecease, then your now ex-spouse continues to receive 75% under option A or 50% under option B monthly benefit for the rest of his or her lifetime. So again, understanding that that is a one-time election and it is locked in. That benefit cannot be changed. Likewise, the reduction to your monthly benefit, in our examples, you saw it was a straight 15% for option A or a straight 10% for option B. That has the ability to be slightly different depending on your lifetime beneficiary's age. If your spouse, for example, is older than you would expect to take a slightly reduced, or rather slightly less reduction. So instead of 15%, you might take a 14% reduction. Versus if your spouse is younger than you would expect to take a slightly greater reduction to your benefit because we would anticipate paying the spouse out longer. Okay. The best way for you to see what your benefit amounts can be is to request or to go online and create a benefit estimate. Those estimates are free of charge. And if you are tech savvy, you can do it from the convenience of your LAGERS account. You can prepare estimates for any retirement date. So if you are just now 55 as a general employee, you can see what it looks like to take a reduced benefit versus what it looks like if you work until age 60. You can see what it looks like to name a spouse or a loved one as a joint survivor, especially if you're still years out and want to tie that knot officially to meet the criteria. Lots of options. Remember, those are our 4 monthly payment options you have to choose. You get to choose only one, and the plan that you elect when you retire, once we pay those benefits, you're locked into that plan for the rest of your life. That's your first big decision. The next big decision you'll have to make when you complete your retirement paperwork is whether or not you want to take a plus payment. Plus payment is a partial lump sum, and it is essentially 2 years worth or 24 months of your life value paid out to you early in retirement. With taking that plus payment early in retirement, it then results in a lifetime reduction to your monthly benefit. Usually of 16% at age 60, but if you are younger, then you take less of a reduction versus if you're older when you choose to retire, if you take the plus, you take slightly more of a reduction. With the plus payment, it's paid early to you in retirement, but it will not be paid until at least 3 months after you've retired, or you can choose to defer it as late as 5 months after you've retired. When it comes to electing the plus, you again will receive your payment elections form about a month before your retirement date. On that form is where you indicate whether or not you want to take the plus payment. Then, if you elect yes, you want to receive the plus, that is when, once you're retired, you'll receive additional paperwork from our office concerning how you want the plus payment to be paid. If you're electing to take a plus payment, you have 2 payment options. You may choose to roll the full amount into a qualified retirement account. So imagine if your plus payment totals $30,000. You could elect to roll that full $30,000 into an existing 457 401k account. Perhaps you have a 401a, or you go and establish a traditional IRA. By conducting that rollover, you're simply transferring those funds from LAGERS retirement into a different retirement account. When it's transferred, it takes on those characteristics of the new account. and then it's taxed in accordance with it when you take distributions. Your second payment option, though, is to take the full lump sum out to yourself. If wishing to have the full $30,000 paid out to you, please know when Loggers pays it directly to you, it is considered taxable income. Just like your monthly benefits, when benefits are paid from Loggers directly to you, it then becomes subject to taxes, both federal and potentially state tax. The IRS is aware that that partial lump sum is taxable, and per IRS guidelines, we are required to withhold 20% automatically off the top for federal taxes on your behalf. So there, a $30,000 partial lump sum quickly dwindles to $24,000 after we've withheld the $6,000 for federal taxes. Okay. Keep in mind that 20% isn't guaranteed to be enough to cover you at tax time. Depending on when you take it and what your tax liability is, you may owe more or you may be entitled to a refund. That's where talking with a tax professional is highly encouraged. As you're preparing for retirement, it's always helpful to take your benefit estimate to them so they have an idea of what your income will be, and they can help you decide what, if any, taxes you want withheld up front. But likewise, when you're electing to take a partial lump sum, it can be extremely advantageous to work with your tax professional so they can help advise when it's best to take that lump sum if you have the ability to take it within the same calendar year or defer it into the next calendar year. Also, be mindful if you are younger than 55 as a general employee or younger than 50 as public safety employees taking that lump sum, and that would be because you meet the rule of 80, for example, you could incur an additional 10% penalty at tax time because it's referred to as early distribution of retirement funds. So something else to just be mindful of and work with the tax professional to further gain clarification for your tax liability. Those are your two payment options, though, when it comes to taking the partial lump sum. Again, you don't have to know that immediately before retirement. You'll get to complete and make that choice after you've retired and fill out the necessary paperwork. In taking a look, the partial lump sum, it does sound enticing because yes, it's 2 years worth of benefits paid up front, but remember, it does result in a lifetime reduction to the monthly benefit. So taking a look at our member's example, her benefit without taking the partial lump sum was $1,125. And electing to take a partial lump sum at the age of 60, she takes a flat 16% reduction. Therefore, her benefit is now $945 monthly for the rest of her life. And that again is because we have paid her out 2 years worth, so $27,000 upfront early in her retirement. In her case, when she retires October 1st, with taking that partial lump sum, she gets her first monthly benefit in October of $945. She receives it again in November, in December, and then in January, she's opting to take the lump sum to herself. So therefore, she receives her monthly benefit in addition to the lump sum, less the taxes. Okay. She could, again, choose to defer that as late as March in her case. Okay, so you can have it paid 3 to 5 months after you have retired. If you have questions about that, I do encourage use that chat feature or the Q&A. Let's see, no questions. Let's continue. Retirement is a big life chapter to prepare for, but you're not in it alone. When it comes to your Loggers benefits, please reach out to us. We're here for you. As members, we have benefit specialists that are here all hours of the business week to answer your questions. But our website is a wonderful resource, as well as that My Loggers account. When you create and log into your My Loggers, It is your personal account. It shows what the monthly wages are being reported as. So it's a great way to start auditing or reviewing and ensuring, especially as you're approaching retirement, that your wages are being reported correctly, especially if you're experiencing overtime during this time. It can be helpful to ensure that that's accurate. But again, you're welcome to call or email or even visit us in office. Our office is located here in Jefferson City. And we also host a number of events statewide, which if you've never been to our website, here you can see a listing of events and you can go to other webinars that may be of interest to you. Likewise, we have regional pre-retirement seminars. Pre-retirement seminars go into greater detail about these payment options and the elections you have to make. Also, it gives you a better review of taxes, cost of living adjustments, working in retirement. They're a wonderful tool, and it's encouraged for members, especially when you're within 5 to 8 years of retirement, to attend one. You can see that we have in-person as well as virtual options for these. Well, thank you all for being here today. This does conclude this afternoon's webinar. If you have questions, please feel free to type those into that chat and Q&A feature. I'll hang around for a while, especially if questions start to flow in. Otherwise, thank you for the jobs you do within your communities. Remember, we're here to support you. All right, got a question here. If my last day of work is December 20th, when will I receive my first payment? Great question. With a December 20th termination date, that is when you can set your retirement to be effective as of January 1st, 2023. But in order to receive that, you have to apply. And that's where completing the retirement application, which again can be completed online or by completing this form. You must file it for January 1st. It has to be filed by November 30th. Technically, you could file it as early as October 1st in our office. And so when you file it for January 1st, based on the holiday this year, your first benefit would be paid then on Tuesday, January 3rd. I'll be happy to create copies, PDFs of the slides and get those emailed out. If you would like for a copy of those slides, please feel free to email or rather chat your email address to me and I'll be sure to get those sent over to you. Question, if I die before I retire, what options does my spouse have? Very good question. So death before retirement results in the option A calculation, that joint and survivor 75%, if you have a qualified lifetime beneficiary. So if your surviving spouse and you have been married for at least 2 years, for sure she would qualify for then 75% of your calculated benefit monthly for the rest of her life. Okay. If you do not have a qualified beneficiary for that lifetime beneficiary position, that is when we will look then if you have dependent children. If yes, then 60% of your calculated benefit is paid to them until they're no longer dependents. If you do not have dependent children and there's no qualifying spouse, then we look to see if you have any account contributions. If there is an account balance of money that you have paid in, that is when we refer to your beneficiaries to pay that out. If you've never made account contributions, that is when, unfortunately, nothing further would be payable under this membership. And so for many, that can be a driving factor to retire and start to receive benefits. Good question. If my retirement date is December 2nd, but I have vacation until 1st of February, When should I apply for retirement? Great question. So many members do use annual leave or vacation time to extend out their termination date. In your scenario where the February 1st or first part of February is going to be your last date of covered loggers employment because you're extending out your termination date, that is when ask yourself, is it going to be before you earn service within the month of February? Service is determined depending upon each employer if they've elected for 1,000, 1,250 hours or 1,500 hours as coverage. For many employers, they have elected 1,500 hours, meaning if you work through the 15th of the month, you are earning service credits. So what I would encourage in that case, contact our office to find out what your employer has elected or check with your employer directly. If you're not going to earn service for the month of February, so safely if you worked, for example, through February 5th or your leave was through February 5th, technically you will not qualify for service the month of February. Therefore, you could retire effective February 1st. Be sure to file your application by December 31st. All right, thank you for those email addresses. I'll be happy to send over copies of the slides. Another example here, if my last working date is December 1st, but I have 30 days vacation that I will use to run me out with additional paychecks, will I be able to receive loggers payment January 1st of 2023, or will it be after all vacation days are exhausted? Thank you. In that case too, again, if your last physical day of work is December 1st, but you have 30 days that you're burning through a vacation, so it's extending out your termination date. And in that case, it would end right there in the first part of January. Likewise, in your case, if your last official day of covered loggers employment occurs before you earn service in January, then yes, file for January 1st retirement and you'll receive your first retirement benefit check while also still expecting pay for the work or for the time that you've applied to be off. If you have specific questions about that, that's where talking with your HR or contacting our office directly as well. And we can pull up the account to see what will qualify, whether or not you're going to expected to earn service or not. But we will ask, what is your planned last day of covered loggers employment, of loggers covered employment? Okay, whether it's because physically you're ending and terminating your position at that time, or because you're physically stopping, but you're applying leave towards an extended termination date. Great question. You have other questions, please type those in at this time, either via chat or there on that Q&A. I'll be around for a couple more minutes, but if more questions come in, certainly I'll be happy to take those. And so here again, kind of online, you can see when it talks about eligibility, you'll want to check with your employer because it is an individual employer election as to what they constitute as loggers eligible membership. And so they could have elected the 1,000, 1,250, or 1,500 hours. If, for example, your employer is a 1,500 hour employer, that means when you work through the 15th of the month, you're earning service credit. If they are a 1,250 employer, then working through the 12th of the month, you earn service credit. And if your employer has elected 1,000 hours, typically working through the 9th or the 10th of the month is what qualifies you for service within that month. You can technically receive benefits a month in which you are not expected to earn loggers covered service. And so if you have further questions on that, let me know. You can type it into that chat feature. It helps if you know specifically when your last date of loggers covered employment will be, whether it's again because physically you're terminating when you stop working, or you're stopping working, but you're applying leave to extend out that term date. And not all employers allow for that benefit, but some will, and it helps with other benefits of health insurance or vacation time, things of that nature. Okay, one final minute here. If you have questions or if you're working on something, please enter it so I don't end the webinar. Question came through. Do you do in-person application for retirement at your office by appointment where I can fill out all necessary forms and sign? Good question. You are welcome to call and schedule an appointment with a benefits specialist. They'll work with you to schedule one that works best when you're going to be or able to be in Jefferson City. First, I do encourage though that you first file the application. You'll see the application itself is a simple one-page application, and it's more so just to gather all of your information and start to get that information from your employer. The next set of paperwork, known as your retirement packet, that one can be more beneficial for you to work with a benefits specialist to complete together. And so that's why I encourage first file this application and then give us a call about a week after you have filed it and set up that appointment if you would like to schedule a one-on-one, either in person, over the phone, or virtual meeting with that counselor or specialist. Great question. Do remember the direct deposit form. It will need to be completed by you and the financial institution. So that form would still require some extra work to get completed fully. All right. Again, one final minute here. If you have questions or we're working on some comments or inquiries, please go ahead and hit enter so I don't exit the webinar beforehand. Okay, I see a hand up. Mr. Henry, I do see that your hand is up. I have given you the option if you would like. You are welcome to unmute yourself if you prefer to ask aloud. Or certainly feel free to type your question into that chat or Q&A feature. All right. If you have a question, please go ahead and type all final questions into the chat or Q&A feature. I'm going to end this webinar at 3 o'clock. You're welcome. Thank you all for attending today's webinar. Oh, very good question. Can you tell me how to contact Social Security? Yes, let me help you find their website. So again, we are not the specialists in Social Security. We're also not tax professionals, so you don't want our advice in those areas, but certainly Social Security, it's an administration that many of us are going to expect to receive benefits through as well. And so you can go to their website, which is ssa.gov. And from here, you too can create your own personal account. Through your My Social Security, you're able to access your Social Security statements, which will give you an idea of what you can expect to receive. Likewise, you can contact Social Security. They usually have an 800 number. Find it for you. I know they've done a lot to where it goes online now. But here's that 800 number that you can try to contact as well. In previous years, going to your local Social Security office could be extremely beneficial. Since COVID, I know a number of them are still closed. And so, unfortunately, again, we aren't specialists in LAGERS, so I'm sorry you're having difficulties contacting them. I would encourage if you can get to a local Social Security office, but again, their hours have varied throughout every region. But trying to get in person to your local Social Security office can be extremely beneficial, or seeing if you can leave a callback number. But I'm sorry, it sounds like you've done that and are experiencing some difficulties. Just to kind of give an idea, this helps to locate offices nearby. So I know in Jefferson City, going to their website, you can see other entities or other locations by entering your zip code as well. Too, though, if you are tech savvy, creating that My Social Security account, from there you can apply for benefits, view your statements as well. With Social Security, they do recommend that you file for benefits at least 3 months in advance. All right, and seeing no further questions at this time, thank you all again for joining me this afternoon. If you have further questions regarding your LAGERS benefits, please give us a call. You can contact us via calling, or you may email, or again, check out our website. It's a wonderful resource too. Thank you again, and take care, be safe, and have a great rest of your week.